Hi, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Patti, who's the CEO of IndexIQ. Adam, welcome to the show.
Thanks for having me.
Welcome back, I should say.
Thank you.
So, how are your funds doing? Let me just ask you that.
Well, doing great. Performance-wise, they've been best in class across the board, and we can get into specifics on that. Assets are flowing in, and couldn't be happier.
So, now you have a fairly broad range of funds, is that right? I mean, and I have to point out that your funds sort of replicate a hedge fund. So people maybe who can't ordinarily get exposure to a hedge fund, it's a way to do that through your funds, correct?
Yeah, our flagship products are around that concept of hedge fund replication. Our products really fall into two main categories: absolute return strategies and natural resources. So some of our products in the absolute return category are in fact hedge fund replication, but then we have other types of strategies as well.
And how are these funds different than, your standard or what you can get out there right now? How do you differentiate from what exists right now?
All of our products are built on a lot of market research. We go out and talk to advisors, try to understand what their pain points are with existing products in the marketplace, and we design products around that to really solve problems. So if you look at any of our products, there are no direct comps in terms of specific construction to our products. Very unique.
Now, when you look at the performance of your funds to date, are you seeing any trends emerging? Are investors going into any particular areas that maybe are surprising that we ought to know about?
Yeah, by far, probably the most attractive place right now, at least in terms of our product set, has been real estate. We have a ticker, a ETF ticker ROOF, ROOF, which is the only small cap REIT ETF. It's up 37% over the last 12 months and gives a 6% yield. But the interesting thing is that the portfolio, if you compare it to the large cap REITs in the marketplace, is valued at around a 30% discount on a price to earnings, price to cash flow, and a price to book basis. So it's actually undervalued, and it's a great place to be right now.
It's interesting how we've seen, the froth build up again in real estate. I know a lot of people said we wouldn't see that coming back for a long, long time, if ever. But now it's almost as if there's a new bubble emerging. In fact, some analysts, commentators are saying exactly that. But you're saying your particular product is still undervalued.
Well, it absolutely is on a pure metrics basis versus the large caps. And the reason for that is that when people buy REITs or any of these other sectors, they're pouring money into the same securities. In REITs, it's Simon Property Group, it's Vornado, or it's the large cap REIT ETFs. There's so many billions of dollars flowing into those securities. They're actually pushing the prices around. So what we tell investors is go where everyone isn't. Go into the small cap sector. Those are undervalued, and they're kind of the hidden gems in the marketplace.
And what about commodities? I have to ask you about that. Obviously, commodities has been a very huge theme. Do you see that cooling off at all, or still a lot of interest there?
Well, commodities have had a rough go of it year to date for sure, and even going back 12 months. They certainly haven't kept pace with the S&P 500. But we tell people, look, you need to have a well-diversified asset allocation program. You should have exposure to commodities in all market cycles. And now we believe is a great entry point for a variety of reasons. First, we've seen a big drawdown in certain commodities like gold, for instance. But you want to buy low and sell high, right? So if you want to buy low, now's a good time to get into those types of asset classes.
Right. Now, how much has the performance of the stock market, spurred activity into these areas? Maybe we'll call them alternative investment areas, hard assets, or maybe taken away from it?
Well, we see the hot money clearly jumping into equities, right? So when the equities go up, everyone's going to jump in behind them, or at least the hot money investors or the market timers. So we have seen some interesting allocations to our commodity products recently, but we would expect a lot more going forward, given the drawdown in those asset classes and the big performance increase in the S&P and other equity markets over the last 12 months.
Do you think that, we hear a lot about interest rates being low and maybe there's a bubble in the bond market and people not getting, a decent return in fixed income? Is that behind a lot of this?
Well, that's an interesting problem. Advisors are certainly fearful over the interest rate environment given how low interest rates have been. And, they are looking for alternatives. And clearly commodities are a great place to protect yourself from that, from inflation or from higher interest rates. So, for instance, you look at our product GRES, G-R-E-S, which is the broadest natural resources ETF in the marketplace, has all the exposures to the main commodity classes, including timber, water, and coal. It's been the best performing broad commodity product over every year of its inception with the lowest volatility. That's the type of product you want to get into because of the lower volatility as well as the nice yield you get on it.
How hard is it now, given the diversity and the number of ETFs out there, to draw attention to the products that you have?
For us, it's all about track record,
right?
So, if you look at how many ETFs are in the marketplace right now, it still pales in comparison to the mutual fund market. So, I'm an ETF guy. We do have a mutual fund as well, so we're not against mutual funds. But we think it's still early innings in the ETF marketplace. But the key is to really differentiate your products and really focus on quality. And we started the company in 2006 to focus on quality, incubate strategies, make sure they're consistent, and provide, value to investors.
Now, do you have any new products in the pipeline, new ETFs in the pipeline?
We have quite a few in the pipeline. I can't speak to them right now because we're in a quiet period, but they're very unique and, again, hopefully designed to solve problems with existing products in the marketplace.
All right, some innovation. Adam, Patti, great having you here.
Great.
Thanks very much.
Lot.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.